Welcome back to Strongman Personal Finance. Welcome back, everybody. It is a beautiful Friday night, sitting in my future daughter's bedroom, drinking some water. Maybe I should have some beer later. We'll see. And dumping on stocks that I freaking hate. Now, I've done some very, very basic analysis of this stock called Palantir. Okay. It's like this spy stock, develops software so they can spy on you. They can collect data when you take a dump. So when a freaking assassin drone is hunting you because you didn't retweet Biden's tweets, they know exactly where you are. They know exactly when you take a dump and where you take a dump and how long you take a dump. And they're going to rocket you to death, boy. So that's Palantir stock. Anyway, that's basically the whole company. Like, I read the 10K, that's all it said. So I want to show you some interesting things that I learned about Palantir stock, okay? And it took me about 5 seconds to look this up. I'm not even joking. So you may not believe this, but Palantir stock does not have positive revenue growth. Let that sink in for a minute. Palantir's revenue growth is actually negative. But you say, strong man. I go on the financial statements because you taught me so much about accounting, and I can see that Palantir's revenues are growing every single year. Oh, and you would be 100% right. But guess what? As a shareholder of Palantir, your share of the revenues is actually decreasing at a faster rate than the revenues are growing. What does that mean? Palantir is diluting people so freaking bad that if you bought a share of Palantir 3 years ago, you've experienced massive revenue declines every freaking year. Palantir, you can't think of Palantir as having growing revenues. From a shareholder perspective, they don't. They have declining revenues, massively declining revenues. And I'm going to show you guys exactly what I'm talking about. You think I'm freaking crazy? Oh, Palantir, it's a future bro. Let's go look at the financials of Palantir, la futura, número dos. So here's Palantir Technologies Incorporated, okay? Trades on the New York Stock Exchange, and it's currently at $9.48. Now, Palantir's been freaking wrecked recently, but I don't really judge a company based on that because sometimes people or institutions sell off stocks irrationally. Doesn't necessarily mean Palantir is a bad company. However, I want you to key in on one thing here, okay? Look at this revenue growth year over year. From 2018 to 2019, it grew 24%. 2020 to 2021, 47%. And then during 2021, 41%. So if you look at this on the surface, it's, oh my God, their revenue is growing massively. And you look at this beautiful chart here. Wow, look at those percentages. Let's look at this. Wow, look at that revenue growth. However, in order to experience that revenue growth, you have to own the company, right? You have to buy a share of the stock. Now let's go and see the shares change. 6%, 69, 420, 69%, 96%. So let's go back and look. 20, 40, something 40, 6, 69, 96. It almost looks like the shares are growing faster than the revenue's growing. That means you as a shareholder are getting less and less of the company's revenues. Look at this. Look at this massive increase in shares. Oh. When did Palantir go public? I don't know. I don't care. But holy freaking crap. So I did some quick napkin math. Okay. Actually, I don't know. There's got to be a way you can export this. You might have to pay for it. But I simply took the revenues divided by the number of shares outstanding diluted. And here's what I got. So in 2018, if you owned one share of Palantir, you were basically entitled as a shareholder to get $1.09 of revenue. In 2019, $1.29. So it looks like you actually had some revenue growth as a shareholder, 17%. From 2019 to 2020, it looks like your percentage or your portion of the revenues has declined by 13%. And then in 2021, it declined by 28%. So you go from 0.09 of revenue per share down to 0.8 revenue per share. That's a massive decrease. Up 17, down 13, down 28. This is your real revenue growth as a shareholder of Palantir, my Alantir. Okay. That's freaking horrible. That's bad. So you cannot look at these companies and say, well, if I buy this stock, it's growing at 40% revenue, just like all these other stupid stocks out there. No, you're actually losing revenue. Okay. So the whole revenue story is BS. Now, if you didn't care about revenue, what else is there to like about this company? Well, the only thing that I see here, we'll actually go back to we'll go back. Yeah, here. The only positive thing I see is free cash flow per share. That's basically it. Gross margin, they've been improving their gross margins. However, their operating margin, this is before interest and taxes, has been negative, 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 negative. Their profit margin, negative, 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 negative 33%. God, freaking horrible. Okay. So really the only thing that this company has going for it is, okay, they generated some free cash flow. I don't know how long that's going to last. Maybe they have to keep investing the cash in the future. I don't know. But the one selling point of this stock, the revenue growth, is not real. It's actually revenue decline. If you own one share, you lose more and more of the revenue every year because they have to issue shares. Now let's go look at the statement of cash flows. All right. So operating cash flow. So what happened in 2021 that had this massive freaking reversal in operating cash flow? Because you see 2018, 2019, 2020, it was just dropping and dropping and dropping. And then it had a massive swing. That's what is that in millions? A $634 million swing? That's pretty freaking insane. I wonder what happened. Okay, so exactly. It's the share-based compensation. So, okay, it looks like they issued a ton of shares in 2020 and a ton of shares in 2021. So the reason this company is unprofitable on a GAAP basis, it looks like a big part of it is share-based compensation. But that's not a cash expense, guys. Well, it can be. But when you look at it, share-based compensation is them giving out shares of the stock, which means you as a shareholder who bought the stock before are getting diluted. You're getting less and less of the revenue, which is why Palantir has experienced revenue declines from the perspective of the shareholder. Okay. We'll see how this operating cash flow does. I mean, maybe it keeps growing. Cool. But I ain't touching this freaking thing with a 10-foot pole. Holy freaking crap. Jesus Christ. So, I mean, I don't get it. I mean, yeah, maybe they have a moat. Maybe they'll turn into a titan of industry in their niche market one day. But with these kind of losses and this much share dilution, I'm not buying a stock that gives me, what is it? Negative 28% revenue growth. Like that's just that's getting butchered. Absolutely freaking butchered. So yeah, it's a growth company, bro. The revenue's going up. Revenue by revenue. All right, let's do some quick comments. Palantir is going to be the next tattooed chef. I think Palantir is more of a mode than tattooed trucker's sweaty nutsack. You have to debate with Amit. What's there a debate about? I mean, I'm not the type of he seems like one of those all-in investors, like he finds his company he loves and he goes all in. That's not what I do. We wouldn't come to any kind of agreement. Listen, strong man, Carp is worth $40 billion alone without anything else. Yeah, I guess it's worth having negative 28%, revenue decline as a shareholder. Tom, Crash, Nash, and Meet Kevin share the same bed. Ooh, I'd watch that. Palantir has SKU expansion you're not accounting for. Why do so many different YouTubers push so many different garbage stocks? I don't know. I can't explain that. I don't know. YouTube is like its own special world where insanity happens. If you don't like Palantir, you're a commie. Yeah, I'm a communist. I asked Amit in a comment, and he said he has 10,000 shares. So he has roughly $100,000 invested in this stock, and he probably put out way more. Can I get a shout out?
Mark, I'm shouting you out right now. Congratulations.
Yeah, you guys have to, okay, seriously, when you start looking at these trash companies that these YouTubers pump on you, go look at the revenue growth per share because you're a shareholder. The revenue could go up 1,000% per year, but if the shares go up 2,000% per year, your revenue per share is declining. It's not going up. You're not experiencing that revenue growth. Communist by Ommunist. Carson, you missed the hate fest I had with Tesla earlier. Like the last debate with me, Kevin. Yeah, apparently we're gonna have a second debate. I don't know. We'll see. I don't know what there is a debate about anymore. Palantir is just eating the investors' dollars. Good freaking Lafufu lovers. Is Lafufu pumping Palantir? I mean, I've seen him talk about it once or twice, but I haven't seen him like go crazy about it. I don't know. Maybe I don't watch all of his videos. I mean, I know I'm pretty obsessed with him, but I think about him all the time. I wake up and like, Lafufu. Oh, no. Just a dream. Just a dream. If I subscribe to your Patreon, can you teach me how to apply the common sense factor? Yeah, subscribe to the $20,000 tier, and I will give you a full day of my time. We will hang out. I'll hang out with you for a week. We'll be best buddies. I'll even wash your dishes, maybe. Benefits of buying stocks with dividends. I'm not a dividend investor. I buy every stock in the world. Dividends are they're an indicator that the company's profitable and they're confident and they're returning, value to the shareholders. But a dividend comes from the company's retained earnings. So when a company pays a dividend, you literally reduce the equity of the company. Retained earnings is an equity account. You reduce the equity of the company, the value of the company goes down commensurate with the size of the dividend. Dividends produce no extra value, in my opinion, besides generating a taxable event. And you can't choose when you receive the dividend. I mean, I guess if you looked at the company and see when they gave their dividends out, you would choose, but you can't choose as a shareholder. I mean, I guess you could vote, but your vote ain't gonna mean crap. When Tesla goes to 100, I'll sell everything and buy VT. Just do it now, bro. Come on. I bought your 20K tier. Dude, if somebody gave me 20K, well, you know what I would do? I would literally throw that all into VT. Right freaking. Well, of course, I have to take taxes out because you communists like to raise taxes. I'd freaking throw that all into VT, man. Woo, boy. Woo. Me, Kevin, if you're here, you should check my Patreon out. It's got a bunch of interesting stuff. Let my Tesla shares 10x again, and I'll be able to afford that tier. You need to put your shirt on. Sometimes I wear shirts, sometimes I don't, okay? I'm not one of these like YouTubers that, there's a formula you got to follow. You got to have this camera and this mic, and you got to dress like this, and you got to have a green screen. I just freaking do what I like. And yeah, maybe it hurts my channel growth, but for me, it's fun to just be a total scumbag and dress like crap. Dividends are not taxable for corporations, though, so our share buyback's the same thing. Well, no, they're not taxable to the corporation. They're taxable to the shareholder, which is you. C Corps have two levels of tax. Well, the C Corp doesn't. When you buy a share of a publicly traded, like a C corporation, the corporation gets taxed. Then that money goes into retained earnings. And then when they pay the dividend, you get taxed. That's the second layer. When you receive the dividend, you get taxed. But if the company does share buybacks, you only get taxed at one level because they're just buying back the shares. There's no taxable event. Does Meet Kevin and Lapupu do butthole stuff? I don't know. Price you would pay for Palantir. I'd have to go look at the book value. Honestly, I wouldn't buy the stock at all. I don't like massively unprofitable companies that are issuing shares faster than the freaking revenue's growing. Like, that's crazy. I mean, there's other things I can do. Save your last video about Tesla and share it to Meet Kevin. He might check it out, but I don't know. If you watch that video and you still aren't convinced Tesla's a bubble, I don't know what to tell you guys. Will AMC squeeze? No, it won't. All right. Any last comments? That's my analysis. If you guys just tuned in, Palantir actually has negative revenue growth. And if you think I'm crazy, go watch the beginning of the video. Anyway, that's it. Like, subscribe, tell your friends about me. Go sign up for my 20K tier Patreon. Buy my book, Stop Being a Broke Loser. It's on Amazon. Buy my crappy merchandise that I probably should improve. Oh, one more. Hold on. Lafufu comment. I have an issue when I'm saying Lafufu when I'm pissed while playing games online with my friends and have no real explanation of why I'm saying it. Could trash guys just buy the index. Stop worrying about these stupid stocks. All right. I'll talk to y'all later. Cheers.